Imagine a corporation where every employee has a vote, injured workers get guaranteed compensation, and the CEO can be fired instantly by the crew. You might think I'm describing a futuristic Silicon Valley startup or a progressive Scandinavian cooperative. I am not. I am describing a pirate ship in the year 1715. Here's the paradox that history books often gloss over. The most chaotic, lawless criminals of the Caribbean didn't just break the rules, they accidentally invented new ones that the civilized world had to copy to survive. While the Royal Navy was struggling with mutinies and starvation, pirate vessels were operating with ruthless economic efficiency that outperformed the empires chasing them. But this isn't just history. The pirate cycle, where an external disruptor forces the establishment to build stronger financial walls, is happening right now. It is silently dismantling the security of your digital assets and global supply chains. The skull and crossbones have been replaced by ransomware code and supply shocks, but the economic impact is identical. By the end of this video, you won't just understand how thieves built the modern banking world, you will master two critical survival concepts: decentralized resilience and the letter of marque protocol. These are the tools you need to navigate an economy that is becoming as wild as the West Indies.
This is Finance Beyond Seas. We explore the moments where the currents of maritime history and the tides of the global economy collide. We're here to navigate the wreckage of the past, to find the financial lessons that will protect you today. We analyze history and systems, not futures. Nothing presented here is financial advice. It is purely historical and economic commentary.
Let's set the anchor in 1695. The global economy was fragile, heavily reliant on the slow, vulnerable veins of trade connecting the East Indies to Europe. Enter Henry Avery, the king of pirates. Avery didn't just rob a ship. He committed the crime of the century by capturing the Ganj-i-Sawai, the heavily laden treasure ship of the Grand Mogul of India. The heist was astronomical. Estimates range up to £600,000 in 17th century currency. To put that in perspective, it was enough to rattle the foundations of the newly formed Bank of England. But the immediate theft wasn't the real crisis. The crisis was the diplomatic and financial shockwave that followed. The Mughal emperor, furious at the English pirates, threatened to close all trade with the British East India Company. Suddenly, the stock price of the world's most powerful corporation wasn't determined by its sales or spices, but by the actions of a few rogues in the Indian Ocean. The company faced total ruin. Think of this moment like a massive cyber attack on a centralized cloud provider today. Just as Avery's attack froze the trade routes of the 17th century, a single disruption in our modern logistics can freeze your access to goods. This 1695 crisis birthed a desperate need for a new kind of risk management, a concept we will define later as the letter of marque protocol. But first, the crisis had to get worse. The British government realized they couldn't police the entire ocean. The risk was systemic. Every merchant ship was a potential liability. This forced a rapid evolution in London. Merchants began gathering at Lloyd's coffee house, not just to gossip, but to put a price on fear. They started underwriting risks that were previously deemed acts of God. The chaos of the Caribbean forced the order of London. The pirates, unknowingly, were the architects of the modern insurance industry. They made risk a tradable asset. The result? The East India Company survived by militarizing its trade and insuring its bottoms. They adapted. The lesson here is profound. The establishment always builds a bigger vault when the thieves get smarter. But it wasn't just the victims who were innovating. The villains were too. While London was inventing insurance, the pirates were inventing social security. Consider the chasse-palte, or the pirate code. In a world where the Royal Navy would throw an injured sailor onto the street to starve, pirates created a strict compensation schedule. Loss of a right arm, 600 pieces of 8. Loss of an eye, 100 pieces of 8. This wasn't charity, it was cold, hard economic incentive. It ensured loyalty and reduced the fear of risk-taking.
This system mirrors the modern concept of golden handcuffs or equity vesting in startups. By giving the crew a guaranteed stake in the outcome and protection against disaster, pirate captains maintained order in a profession defined by chaos. This connects directly to the first example. While London managed risk externally through insurance, pirates managed risk internally through contract law. Let's move slightly forward to the early 18th century, to Woodes Rogers and the cleansing of Nassau. The British Crown realized they couldn't defeat the pirate republic with force alone. It was too expensive. Instead, they used a financial weapon, the pardon. They offered a clean slate, economic amnesty to any pirate who surrendered. They effectively bought out the competition. Those who refused were hunted down, often by their former colleagues who had accepted the pardon. This was a masterclass in market consolidation. The state co-opted the talent, the skilled sailors, and eliminated the toxic assets, the die-hard captains like Blackbeard. It's a pattern we see whenever a regulated market absorbs a black market. Fast forward to today. The wooden holes are gone, replaced by fiber optic cables, but the water is just as treacherous. We are witnessing the return of the pirate economy in the digital realm. Look at the ransomware groups operating out of safe haven jurisdictions. They are the modern Henry Averys. They don't steal gold, they steal access. And just like in 1695, their actions are forcing a massive evolution in the insurance industry. Cyber insurance premiums are skyrocketing, and companies are being forced to hold Bitcoin on their balance sheets just to pay potential ransoms, a modern tribute similar to what merchants paid to Barbary corsairs. You see, whether it is a Somali skiff approaching a supertanker or a hacker encrypting a hospital's database, the mechanic is identical. It is an asymmetric attack on a centralized system. And remember that decentralized resilience concept I mentioned? The pirates survived for so long because they had no head to cut off. Today, decentralized finance protocols operate much like those pirate ships. Code is law, governance is distributed, and they exist outside the traditional state. Furthermore, look at the Red Sea crisis impacting global shipping lanes today. A small group with cheap drones, modern privateers, can force multi-billion-dollar fleets to reroute around Africa, adding weeks to delivery times and spiking inflation. The fragility of the East India Company is now the fragility of just-in-time manufacturing. The pattern is clear. Complex systems are efficient, but they are incredibly vulnerable to chaotic actors who reject the rules.
What does all this history mean for you, sitting safely behind your screen? It means you are likely living in a bubble of artificial safety. For the last few decades, we have lived through a historical anomaly, a period of extreme centralization and low friction. You assume that when you swipe a card, the transaction clears. You assume that your savings in the bank are physically there. You assume that the energy grid is immune to ransom. This is the peace dividend, and history suggests it is expiring. Think back to the merchants of 1695. When Henry Avery shut down the trade routes, the merchants who relied 100% on the system working perfectly were the ones who went bankrupt. Today, we rely on just-in-time supply chains and digital liquidity. We have sacrificed resilience for efficiency. Here is the concrete risk. We are moving into an era of high-friction trade. Whether it's a geopolitical blockade in a street, a ransomware attack on a clearinghouse, or debanking due to political shifts, the smooth flow of value is under threat. If your entire financial existence depends on a single digital identity, a single currency rail, or a single income stream that requires global stability to function, you are sailing a ship with a glass hull. The cost of being unprepared isn't just a temporary inconvenience. In a fragile system, a temporary freeze can lead to permanent insolvency. The pirates are back, and this time they're attacking the invisible infrastructure you take for granted. So, how do you navigate these storm clouds? We don't run away. We adapt using the lessons from the Caribbean. First, we must implement decentralized resilience. Remember the pirate code from earlier? The pirates didn't trust the admiralty to take care of them. They built their own social safety net inside the ship. For you, this means structural diversification. This is not just about buying different stocks. It is about operational sovereignty. Diversify custody.
The historical lesson is to eliminate single points of failure. Just as a pirate wouldn't dock all ships in one harbor, this principle suggests that relying on a single banking jurisdiction or digital platform creates systemic risk. Resilience comes from having options, not just balances. Skill sovereignty. Just as a pirate crew was valued for specific skills like surgery or navigation, true security comes from cultivating skills that are valuable outside of a corporate hierarchy. In a chaotic economy, the ability to solve problems directly is an asset that cannot be inflated away. Second, apply the letter of marque protocol. In the 18th century, this license legitimized a privateer's risk. Today, this is a mental model for reframing volatility. Instead of viewing friction as an enemy, the letter of marque mindset views it as an environment to be navigated. The counterflow mindset. The merchants who survived the pirate era didn't just hope for the best, they understood the economics of danger. They recognized that while some sectors suffer during chaos, like luxury imports, others tend to thrive, like security, logistics, and maintenance. The strategy isn't about predicting the market, but understanding which parts of the economy are anti-fragile. Regulatory agility. Privateers survived because they knew maritime law better than the Navy. In a world of changing regulations, knowledge is the ultimate hedge. Understanding the rules of how assets move and how systems are structured is the modern equivalent of that legal protection. It turns a passive observer into an informed operator. We often look at the ocean and see only the surface, calm, blue, and inviting. But the sailor knows the truth. The sea is indifferent to your survival. The global economy is no different. It is a wild, churning force that rewards the prepared and punishes the complacent. We have been taught that history is a straight line towards more order, more safety, and more control. The pirate cycle proves this is a lie. Chaos is not a bug in the system, it is a feature. It is the fire that burns down the dead wood so the forest can grow again. The chaos of the Caribbean birthed the order of London. The chaos of today will birth the financial systems of tomorrow. As the ancient Stoics might have observed, the storm does not care about the size of the ship, but the skill of the sailor. You cannot stop the waves of history, and you cannot outlaw the pirates, but you can build a ship that is unsinkable. You can learn to read the weather, and you can realize that in the midst of wreckage, there is always opportunity for those who are brave enough to dive for it. If this deep dive into the pirate economy gave you a new compass for navigating modern risks, signal your support by hitting the like button. It helps our signal cut through the noise. Subscribe to Finance Beyond Seas and ring the bell, because the tide is turning and you don't want to be left on the shore when the ship leaves. Now, we want to hear from you. In your own life, where do you see the system becoming fragile? Is it in your currency, your job market, or your supply chain? Let's discuss the cracks in the hull down in the comments.